Hello, everyone, and welcome to NinjaTrader Ecosystems event today with Will of Pure Financial Academy. My name is Juanita Archuleta, and I'm the NinjaTrader Ecosystem representative here in the Denver office. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage. If you are new to NinjaTrader, please make sure you sign up for a free demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn the mic over to Will, it's important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all funds deposited with your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a full copy of the CFTC risk disclosure, please use the following link. Also, please remember that these trading sessions are not a solicitation nor a recommendation, but simply educational in nature. Thank you again for joining us, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room Will of Pure Financial Academy. Go ahead and take it away.
Hey, thank you so much. I really appreciate the introduction. Thank you so much. By the way, I noticed several names on the way in, you guys being in our, or rather I should say as a part of our company PFA. So I'm glad to see you guys here as well. It's very nice. Thank you all for taking the time out of your day. Let me go ahead and do some screen sharing here. We kind of move some things around on the screen so I can keep as you guys are going we get started here, and there's going to be, I'm sure, some questions. I'm going to try to keep it as just straightforward and basic as possible today, so we'll get right out to things. But if you don't mind, as we're going through the hey, good to see you, and I appreciate it. Thank you so much for the kind words coming in the chat. But yeah, if you guys and gals don't mind, just maybe your questions. I try my best, but at the end of the day, that's all any of us have. And I will get to your questions to the best of my ability. Just wanted to make sure that we get through the presentation first. So maybe we can get to them towards the end of the session if I miss some, which I know I will. So I appreciate your patience and understanding with that. Okay, so just to basically parrot the disclaimer there, I would read that, but did such a wonderful job on the intro there. So of course the disclaimer, we'll just kind of move forward past that. No need me rereading what's already been read. Okay. Today we're going to number one, I'm going to give you a little bit of an intro as to PFA. We've been doing this for quite a long time, so I'm sure many of you, maybe not, but probably a lot of you have heard of our company, and it's just great to be back in the NinjaTrader ecosystem as always. For those of you who have not, let me give you a quick intro as to PFA acronym, Pure Financial Academy, of course. So basically, we're an online community dedicated to supply and demand trading concepts. We've provided training materials and software since about 2009. So like I said, we've been doing this for quite a while, which is amazing. Not us, but the members that we have are amazing. We literally have some who have been with us from day one. It is incredible and just great folks. So the community in itself has a lot to offer outside of the company, just the people who are within it. Very nice. We, of course, strongly believe, I should say, in the power of having others there to support you. Basically, we just want to create a fun and exciting, a very positive and effective environment for traders and investors who wish to utilize supply and demand trading methods. Of course, we would love it if you guys share your experiences with others. So we do have a forum and all of that good fun stuff, and you can do that within the live room as well. We'll talk about that later. But let's just kind of get out, because I know sometimes it can take a little bit of time away if we don't get straight to the material. Today we were, I'm sure as you all saw in the emails that you received or the registration page, etc., we're going to look at Fibonacci trading strategy, basically in conjunction with supply and demand levels. The reason that I would like to do that is because with any strategy, in our opinion, you can always make it better, right? And by you, I mean myself or anyone who is utilizing any form of a strategy. But if we take what we believe to be probably two of the best technical analysis strategies out there. That's going to be your Fibonacci information, as well as, of course, supply and demand. So we focus solely, on supply and demand, and we utilize Fibonacci as just like a means of confluence, right? In other words, it's secondary. It's not primary or anything like that, but we overlay our levels with additional information. At the end of the day, I don't think we can go wrong with having more confluence. Any trader out there, if we can get all of them thinking the same thing at one time, for the most part, that's a good thing, except for the fact that we can't get our orders executed, but otherwise it's good. All right, so just as you can see on the slide, I'm going to make sure that you guys can view my, give me just 1 second. Okay, I want to make sure that you can see my pointer. All right, perfect. So you can see here, if you go to purefinancialacademy.com, you'll see our website. You can email us, call us, whatever, it works for you. Okay, by the end of the presentation, hopefully you'll do one of the two. Okay, so as I said, we're going to start with, talking about the Fibonacci strategy. Hopefully you'll find this to be very interesting. It is a literal strategy in itself. So for example, there are rules of engagement, things to that extent. But please remember, I want to preface this whole presentation with the fact that this, like any strategy, is a, again, it's like overlaying, right? It's finding confluence in the market so that we can add probability to our upcoming and or future analysis. In other words, if I am looking to execute, to the long side or what have you, I would love it if I can, benefit from a boatload of other traders thinking the same thing simultaneously. And it just, again, if you have a lot of people or entities, especially institutions, right? But if you got them doing the same thing at the same time, it's always beneficial. Okay, so the art of Fibonacci trading. We're gonna go through some basic slides and then we'll move out to the charts and we'll kind of put it into action. And hopefully I can find a few examples to show you in real time. So Leonardo Pisano Fibonacci, I'm sure that you're all aware of this. If you've been trading for any decent period of time, you're probably thinking to yourself, yep, know exactly who that is and all of that. You probably know everything about it. These are, I mean, honestly, I'm just trying to throw this out there. Just do some Google searches. I'm not trying to throw any information out there that's magical or anything like that. To us, in our opinion, and I think everyone in here that's actually in our program would concur, we don't think that there is any magic to trading. Honestly, it's probably one of the most simple things that we do, just like getting an email from Best Buy with a discount code, and then we jump to go get that new TV that we want or whatever. But ultimately, this is the same. We're not trying to throw anything new at you. We're just trying to educate on what's already out there. We put our spin on it, try to make it the best we can. Okay. So Fibonacci, the greatest mathematician of the Middle Ages, right? He's very good. So the Fibonacci number system was implemented into technical analysis in an attempt to forecast the future of the market. Like anyone, the only, or any trader, if you will, the only way to really benefit from the financial markets is to understand what it's going to do in the future. Because obviously we can't make any great decisions from things that have already happened because they've already happened. So we're trying to forecast what's going to happen in the future. And this is one of the means of doing that. Fibonacci-based numbers. It's kind of interesting because, of course, this goes across all aspects of life, as Fibonacci had it detailed, but we've never looked into it extremely deep, but I've had it explained to me that it goes all the way into the number of twigs on a tree, right? So it's pretty interesting. That being said, you can see the sequence of numbers there. Each of the numbers is based on the previous two numbers before added together, right? So those numbers can be then divided by the previous number to form a series of numbers used in technical analysis, which is, of course, what we do. For examples here, 1 by 1 equals 1, 2 by 1 equals 2, right? So those are divisible. If you divide the number, of course, that's what you're going to get. If you divide any number in the Fibonacci series with another Fibonacci number, you're going to, of course, get a variety of ratios that are used in technical analysis. So the only thing is, we are firm believers in simplicity. So even as I'm reading this out and I'm talking about it, again, we firmly believe in simplicity, right? So let's look at the most common Fibonacci numbers. We don't want to go in and say, okay, well, these are all the Fib numbers and there's like a million of them. We want to bring it down to the most commonly used Fibonacci numbers in technical analysis. Trying to figure out the amount of twigs on a tree, it might be very different, but in the financial markets, these appear to have always been the predominant. So we got 23.6, 38.2, and I'll just let you kind of read through those numbers without wasting too much of your time. I would probably highlight a few of them. I don't want to say disregard the other, but let me make some notations around them. I believe you guys should be able to see my pointer. So 23.6 is typically momentum. I don't want to disregard that number. It's just not as important to us because it is solely based on momentum. And typically we want to find things that are based on common market conditions, not based on momentum alone. So 23.6 is not something that we're going to use, a ton, right? 38.2 definitely in the 50 and 61.8. So these three we'll talk a lot about going into the upcoming slides. 78.6, 88.6, also very common. 113, 127, as well as 1618. 224 is also one of those where I would say, okay, this, while it does absolutely happen, it's an overextension. I don't want to get ahead of myself, but suffice to say, the 23.6 and the 224 is probably the least of these that we use. All right, so we're going to look at some price patterns today, and then we're going to go into the actual strategy of it in itself. The price patterns that we're going to be looking at are a double top and double bottom, head and shoulders, inverse head and shoulders, as well as ABC retracements. Okay, so we have a plethora of patterns here. And again, we're going to apply some actual rules of engagement to those patterns. And then beyond that, we're going to overlay that with supply and demand, which is very important. Okay, so hopefully you guys and gals can see this pretty well. We tried to kind of open up the imagery to the best of our ability. I hope it's not too hard to read depending on the size of your screen. But as long as you can see my my mouse moving here, we should be okay. Number one, we're going to look at a double top, right? So we're going to go into number one, and we've notated these, of course, so that we can just kind of follow along. Number one here is going to be the left side, right? So this is going to be the double top, meaning the first high and or structure that is made. So to define a double top, we're expecting that price drops away from a major high and then reverts back towards that high, which is going to be very interesting because if you focus on what's happening right now in the financial markets, wow, like we can really make this applicable as we speak, which we're going to do, especially on the SP or any of the indices, whatnot. Big drop. Of course, it'll be the double bottoms. We'll look at that in a moment. So from point one down to point two, right? Imagine that to be 100%. So if I were to draw from point one down to point two, I would measure that move as 100%, meaning from, start to end. The expectation and or to define a double top, there's only three options here, okay? Number one, point three would retrace 78.6 of the 1 to 2 leg. So for example, if we move down 50 points or whatever, we expect to retrace back 78.6% of said 50 points. That's going to equate to a potential double top. If we move to the right, we have a couple of other options because in the double top family, let's call it, there are three different common options. Remember, we looked at those numbers from the beginning of the slide and we said listed out some common fib numbers. So the one on the left is a retracement of 78.6%. This is all based on percentage values, right? And we'll look at the tool that we use in order to accommodate that in a little bit. The second option is if I pull 100% from point one down to point two, I would expect to go back 88.6%. So we have option number one, 78.6, option number two, 88.6, right? So we're retracing back up to 88.6%. And option number three, we retrace back and actually extend beyond the 100%. So we take 100% plus another 13%. Remember, these are based on Fibonacci numbers. These are, Fibonacci sequencing over time. They have, I can't explain it, but they have this magical, ability to recognize certain patterns and percentage values in the markets. It's self-fulfilling, if you will, but it's also very intriguing. So the third option being an extension. So if I go from 1 to 2, I'm going to measure that move as being exactly what it is, 100%. If I go back from the bottom to the top, that would be, okay, from 100 to 0, or inverse would be from 0 to 100% of the previous move down, plus another 13% of that exact same move gives me 130%, 113% extension and or retracement. All right, so 3 different options. I spent a little bit more time on this one because it's going to be the same for the double bottom, which you'll see just a moment. All right, here we have those same 3 options, but they're inverted. So on the left scenario, we have option number 1, which is from number 1, which remember on the previous slide, it was a double top. Here we have a double bottom. So we're going to move down, form a bottom, and then gravitate away from that. Wherever we stop and we begin to retrace back, that becomes point number 2. So then I expect to see one of 3 things occur: 78.6% retracement, 88.6% retracement, and or 113% retracement, which allows for a 13% extension. Okay, in other words, we go back to point 1 plus a little bit. You guys and gals will remember this. I'm sure you've seen it a bunch of times. When you look on a chart and you see a very predominant structure and it goes just above or below it and then turns with momentum, that's basically a double top or a double bottom momentum. Okay, in other words, option number 3. Okay, so try to remember, I know this is a lot to take in, I really do. We're going to focus a lot on this tomorrow. We'll talk about that in just a moment, but don't worry so much right now. I'm just trying to get through the patterns. We're going to look at the rules to engage in just a moment. Basically, we have a double top and a double bottom thus far. Okay, we have 3 different options within 78.6, 88.6, and 113. Okay, all right, next of which is a head and shoulders. If I have a large move up and I form a structure high and then price action begins to fall back, I can measure from point 1 to point 2, and that helps me to determine future price movement based on whatever point 3 actually equates to. Okay, so if price 3 equates to a 127%, in other words, a 27% extension, there are different verbiage that people prefer to use, but ultimately you're going back 100%, meaning all the way back to point number 1, plus another 27%. Okay, all right, so that's option number 1. Option number 2 is that you carry forward and you go a little bit above this. So then you're going to have a 161.8 retracement of 1 to 2. In other words, if I measure from 1 to 2 all the way back up to 1 is 100%, plus another 61.8% is going to give me that next possible point, right? And then beyond that is that 224, which we talked about. Yes, this is absolutely somewhat common. It's just not something that we use a lot, just because it's I would say fewer of the most common, right? It's overextension, if you will, which is happening right now, in fact, but it doesn't happen very often. Okay, so thus far we have a double top, double bottom, and we also have head and shoulders. Inverse head and shoulders is exactly what you'd think. Okay, so we take the head and shoulders, we flip it over. So this is when we're going to be moving down. Make this applicable, if you will, to the current price movement of the broad markets, right? Think about the SP, NASDAQ, Dow, et cetera, like whatever's happening right now, we have exponentially dropped. Okay. I know there's going to be a lot of panic and all that stuff. And I'd love to have that conversation with you in our training, but yeah, I certainly wouldn't be panicked. On the move down, however, we form a low, right? Like some would refer to this as, oh, I think, if I could slide this to the right side, basically I would hide all of this over here. Okay. And I would say to you, oh, this is a bottom, let's say. So some people are going to say, okay, well, the bottom has been put in at point number 1. Maybe they're right, maybe they're not. It goes up and then drops back. So we have 3 different options for an inverse head and shoulders pattern. And I would say these are very, very powerful for your long-term viewpoints. Okay, meaning especially on the broad markets or what have you, if you're looking long-term, you're going to see tons of head and shoulders and inverse head and shoulders at your actual reversals. In fact, if you go back to during your own time, go look at the 2008, 2008, 2009 crash, things like that. You'll definitely see these. Okay. So we go down, we form a low. If I measure from point 1 to point 2 being 100%, an extension of that plus 27 is going to give me 127% of the move from 1 to 2, right? Which gives me 0.3, of course. The second option is that it moves down lower and it gives me 161.8%. Third option is 224%. All three, though, equate to what we would refer to as an inverse head and shoulders pattern. And we'll look at that on the price chart in a bit. All right, so very specific patterns. I've had this asked to me actually multiple times. So when you're looking for these numbers, is it hitting that number exactly? Okay, so let's say right here, for all intents and purposes, we have a move back up and then it moves down to 0.3. So I'm going to measure that move. I'm going to measure from 0.1 to 0.2 to give me 0.3, right? If I measure that move and it goes down and it hits 129, 126, right? It's not perfect. I don't think there's any perfect, excuse me. I don't think there's much of anything that's perfect in the markets. And the reason that I firmly don't believe that is because I can only speak for myself, but I can tell you I'm so far from perfect. It is human nature, I would say, to be imperfect. I don't believe that exists really. And so perfect is a very strong word. So when someone's asking me if we hit that exactly, I'm trying to say, okay, look, nothing in the financial markets, especially in everyday life too, but nothing is actually perfect. So I don't try to say that we have to hit 127% on the dot and then, turn right out of the gate. But what I am saying is that we need to hit that value. Okay. It can pierce just beyond it. But for all intents and purposes, I just want to hit it and not hit the next one. Okay. So option number one, I go down and hit 100. Let's say hypothetically, I hit 130%. Okay, that's cool. I am nowhere near 161.8. So I know I have option number one, and then I can validate rules based upon that information. Okay. Right now, I'm just giving you the retracement and or follow through extension. But when we apply the rules, this will make a little bit more sense. Okay. Let's think about what we covered this far. We've covered double tops, double bottoms, two different price patterns there, really one just inverted to one another. We have head and shoulders, again, inverse head and shoulders, really one pattern, but just inverted. And then we have the ABC pattern. These are all based on the most common patterns in the financial market, and it is astounding. It just, in my opinion, at least, it's very astounding at how these patterns continuously display themselves over and over and over. So if you take just these, I'm going to call it three. I realize it was more than that. So if you want to call this five, that's fine. But ultimately you have three patterns: double top, bottom, head and shoulders, inverse head and shoulders, then your ABC. If you take just these three patterns, apply them into the financial markets, it will, at least for me, it will blow your mind. These patterns exist every day on, I would venture to guess, not going to say every market, but most any market. Okay. So number one, we have a leg from A to B. Now, previous slides, we were calling them 1, 2, 3. I just want you to understand, again, like I said, we're not trying to reinvent the wheel. It's not like we're saying, hey, this is some magic that we created 50 years ago and it's proprietary to us. It's not, guys and gals. Look, at the end of the day, we just want to simplify trading, and we just want to help traders to learn what we've learned, over many years, and hopefully that would be advantageous. So this is common terminology. In fact, if you do some Google searches, I'm sure you'll come up with a boatload of this stuff, right? So point A to point B, is equivalent to, on the previous slide, saying point 1 to point 2. So we want to have a starting point, a secondary point, and a tertiary point. Yeah. So number one, and or A to B, So I would measure from A to B. My retracement, however, would be very different from that of a reversal pattern. The previous two slides, as I mentioned multiple times, we've had the double tops bottoms, inverse, and or head and shoulders. Those are reversal patterns. These are the exact opposite, right? These are not reversals. These are actually trending patterns. In other words, I expect to continue in the same direction in which I've previously been going. So from A to B was clearly up, right? On the retracement to leg C or point C, I would expect from C ongoing to be the same as A to B, okay? So again, a trending market. We need all patterns so that we can follow reversals and trending markets, sideways markets as well, but you'll see these patterns within that also, okay? So we have three different options for the ABC. Number one, we have a large move up. We would call this an impulse wave. We fall back. When we fall back 38.2% of the move up. And that's going to give us that AB leg retracement of 38.2. Again, one of those common Fibonacci numbers. Option number two, we have a move up from A to B. Point C retraces back 50%. Now, if you want my opinion, which many of you may not, and I apologize for that if you don't, but I'm going to give it anyway, right? So 50%, in my opinion, is it's a very, very good number, especially for investors. And I differentiate investors versus traders, because investors are going to look at something and they're going to say, yeah, I'm just trying to get the mid-range, right? I'm not trying to be super accurate or whatever. Whereas traders typically are going to say, no, I want to be as accurate as possible. Now that's my opinion. I'm not trying to push that on anyone, but 50% is your average. It's very in between, if you will. So 50% retracement is a very nice price pattern for giving another leg up. So if I moved from point A to point B in an uptrend, and then I fall back 50% to give point C, I would expect to then have a leg up, and we'll look at extensions here in just a moment. Point 3 or option 3, A to B, and then B to C is going to give me 61.8 retracement. In other words, I have 100% move up and I fall back more than half, right? I fall back 61.8%, and then I'm going to have another move to the upside. A lot of this stuff can be simplified using trend lines. We can apply support and resistance lines, things like that, but there's a lot that we can do. But ultimately, we have a tool that you can literally put on the chart that defines where these points are most likely to fall. Okay, let's move a little bit faster, because now we're going to talk about the rules of engagement. So on the ABC pattern, which we just talked about, we have a leg up, A to B. Let's say for all intents and purposes, we retrace back, whether it is option 1, 2, or 3. Okay, in other words, 38.2, 50, 61.8. We have an entry after the close above a 12.5 extension. Okay, this will make sense in just a moment. But basically, we move up, we move down, and then when we start to move back up, we're looking at a very specific entry after 12.5%. If I'm looking at a downtrend for all intents and purposes, which we happen to gotta love those markets recently, right? So if we have A to B on the downside and we retrace back up at point C, my entry is on the close, is very important language that I'm using here. Entry after they close below 12.5 extension, right? The exit, in other words, a target, is going to be 50% extension. So whatever the A to B was, I'm going to take that move, I'm going to divide it by 2, and I'm going to end up with my target. All right, makes sense thus far? You guys are awesome. Now to validate the ABC trade, here are the rules. Okay, to validate an ABC trade setup, AB leg must cross the 50 period moving average. Again, I told you all we're going to literally apply a strategy. So this is a full-blown strategy. We just want to take it, a few steps further. Okay, so AB leg must cross the 50 period moving average. It must then cross the 200 period moving average. The leg B to C must retrace to a common fib number. For all intensive purposes, 38.2, 50, and or 61.8. The common numbers that we just showed. I'll go back to that. Okay. So these numbers right here, 38.2, 50, and or 61.8. Okay. There's an option here that you can show an indicator. A lot of people love to use indicators, and that's okay. We don't really use many of them outside of our own, which is much more than an indicator, but your standard indicators we usually don't use, albeit I will say divergence is something good, but you could add in an indicator that shows in correlation overbought and or oversold, and of course show previous support and or resistance. So I'm going to move really fast. I know that you guys are going to have the recording, so you can go back and review this at any time and kind of put all the pieces to the puzzle together. And I hope that it helps. So let's look at the double top entry. So from we go up, we form 0.1, we drop back, we form 0.2, right? And then 0.3, remember, we expect it to be a 78.6, an 88.6, or a 113% of leg 1 to 2. The entry, in other words, when we start to drop back, the short entry becomes a close below the 13 period moving average. Okay, very specific, rule-based. Double bottom, just invert that. So we're going to have a down move. We're going to form a bottom potentially. Then we're going to move up. And on the move back down, we're going to measure that move. How far down does it move? Okay, so 0.1 to 0.2, 0.3 is the beginning of point A, right? So if we retrace back 78.6, 88.6, or 113%, I can now take an entry long above the 13 period moving average. Okay, so previous slide, remember, was below. I'm inverting that. Now I'm saying I can take a long above the 13 period moving average. All right, so we're trying to simplify things with a very rule-based systematic approach. Validate the double top and or bottom. Rules to that. Price enters into an area of supply or demand. This is important because this is where I say we're going to take it a step further. I have literally spent years with this, traded with many amazing traders, you know, probably some or most of which far better than myself, but they, there's always one component where I'm like, if you just added this, you know, if you considered maybe adding this one little thing, how would it do? Would it help you? Would it hinder you or whatnot? And that is this part right here. Okay. If you're coinciding any trading strategy with supply and demand in general, most often it is going to be far superior to that of the strategy in itself. Okay, so the 1 to 2 leg moves away from that area. 2 to 3 leg retraces 78, 88.6, or 113 of the 1 to 2 leg. Okay, so I'm going to just move a little bit faster because I know we only have a few minutes actually, and I have a lot of questions to get to. So I'll tell you what. Here's what I'm going to do. I'm going to finish these patterns in our session. Let me skip forward. I want to make sure that I can show you. Number one, I want to show you this. I will go through the slides so that when you're reviewing this recording, you do have the slides. That's number one. That's most important. Okay. And then beyond that, we're going to have a session tomorrow. I'm going to cover the remaining patterns. We're going to go over it. I promise you I'll spend as much time as required in our own live room. Literally, if it takes hours, it's perfectly fine. You guys and gals know that we don't cut the room until the questions are done, right? But I am going to cover each slide here. Again, you can review this in your own kind, but tomorrow in the live room, I will literally cover each and every one of them. All right, so go very slow here. And then finally, I want to talk about our tool that we've developed literally over a decade now. It's called the PFA Zone Suite. It is designed to reduce subjectivity and increase time efficiency by automatically, quotes here, drawing supply and demand zones on the price chart. This is very advantageous to us, and we'll show you that. But I want to skip out to that real quick. Okay, here's the free event. Let me post this real quick so you guys and gals can get to this. There you go. Okay, so if you want to join the event tomorrow, like I said, it's just a time restraint, right? And that's I apologize for that. But tomorrow there will not be a time restraint. I'll go as long as we need. cover every pattern 57 times if we need to, or 61.8 times. How about that? All right. All joking aside, though, join the. All you have to do is register. There's no, of course, it's free. There's no, any of that nonsense. Just make sure you look for the confirmation email. You'll receive an email to join the event tomorrow, etc. Okay. I just posted the link in the chat, so I can just keep moving forward here. Of course, with any event that we do with NinjaTrader, this is one of the very few times that we do offer discounts. I'm not going to spend much time. I would actually rather spend time on the live charts. I will offer this discount again tomorrow in our live session for you, just so we don't, we're not trying to do a sales pitch here, right? I want to give you a couple of examples of these price patterns actually. So suffice to say, today and through the weekend, if you want to purchase our software, if you're familiar with it, you will be after tomorrow, because we'll spend ample amounts of time covering it and all the capabilities and whatnot. It does take quite some time. That being said, you can get it for $14.97, and so on and so forth. Our community, you can get, which is typically $19.99, you can get for $17.99 for a year. And then if you decided to join as a lifetime member, which is normally $49.99, you can get for $44.99, $10, and so on and so forth. Okay. The worst salesman in the world, as you can probably recognize that by now. So let's go ahead and get out to the charts, though. That's not what I'm here to do, right? So tomorrow we'll focus a little bit more. If you have any questions about the discounts, let me know. You can use this discount code right down here, Investor Expo. So just, put that in when you make your purchase, all is well. All right, so let's get out to the charts real quick before I go over on my time. I think I have about 7 to 8 minutes left. Yeah. Okay. So this is a chart that I just want to bring to your attention. Basically, I have a 4-hour chart up here. This is kind of random, to be honest with you. I wanted to use some real examples. I didn't want to come in and just kind of throw something at you on a PowerPoint and be like, hey, this is a great pattern and it works, but then you not see it. So even up to recent, and honestly, I would strongly encourage everyone to watch this bottom, right? Is it going to be a bottom? Isn't it? Nobody knows. Anyone who tells you they know what this is going to be, I mean, it's a very difficult thing to do. So I would watch this, because the patterns that I've provided today, number one, I'm going to go into our tools. This is, we call it the PFA fib zone. So we have right here, notice almost perfectly a 78.6 retracement into our fib zone. We call them the fib zones, right? Now what I'm looking for, remember the rules to validate that, okay? So I have right here my 50 period moving average followed by my 200. So if I get a rally through the 200 period followed by a pullback on the ABC that we talked about before of the 38.2, 50, and or 61.8 retracement, I can then look for a 13 period moving average crossover back to the upside. Hey, everything is good, right? And that's all good, but I'm trying to give you future, evidence here, but also I want to go back and look at some things that you may think, hey, I don't know, does this really happen? So we want to go back, and I thought what would be really good is if we just took it all the way back to, say, the pandemic, right? The pandemic was a very, unusual circumstance. I think we could all agree with that. But if you go back, what's amazing about it is you'll find that these patterns emerge super consistently. And we see these in our live room. We actually look for them. There are very specific things. Of course, we go above and beyond. So we use a little bit, in addition to this, we use our software, of course, which provides us, I will tell you up here, we were looking for what's called a DBD. But basically, it's like a little break up here that tells us we're about to go lower, things to that extent, okay? What I want to do is focus on the pattern itself. So when we were heading to the upside, please remember the double top ABC patterns that we previously provided, right? So remember, this is the top back in 2020, right? Before the pandemic crash. I don't know what they're calling this, but ultimately it was the pandemic crash, my terminology. So if I go into the NinjaTrader draw tools, grab my PFA fib zone. What I'm going to do is I'm going to go to the top, because again, what I'm looking for is, do these patterns emerge? And that's number one. But more importantly, where do they emerge? Okay. So I want to look for the extremes. If I'm overbought, oversold, okay, things to that extent. But most importantly, if I'm into supply or demand. All right. So up here near the top, let's just run through a couple patterns real quick, because I only have a few minutes. I'm going to pull from structure number one. Remember, I applied this so that I could thereby use my terminology, and it would hopefully make sense. It's kind of complex because of all the numbers. So from structure number one to number two, right? Remember what we did previously. We showed the slides and we said point number one, point number two, right? If the price pattern retraces back 78.6, 88.6, 113. Okay. So you see this right here, 113%, almost perfect. I'm going to be careful with that word, but almost exactly, nothing is perfect, right? So you have your pattern beginning to emerge. Then we apply the rule set, right? There's the 50 period. There's the 200 period. Then I say, well, okay, great. We have potentially a double top, right? But what was that next pattern that we were looking for? So if I miss that, which is very common, we talk about this a lot in our room. Hey, we can't go back and do things. We have to always stay ahead of it. And we certainly do our best to do that. But ultimately, we are going to miss opportunities. So at the end of the day, we have to be ready to find the next opportunity, right? So I'm going to go from here. So number one, we know we had a potential double top because we just had a 113 extension and price is dropping back again. So now what I'm doing is I'm following price down, because wherever it stops, that's where I'm going to measure my move. So I'm going to go from the high down. We have a momentum double top followed by that ABC retracement. When you review this recording, go back to the slide where I showed you the 113 double top followed by the ABC pattern. Okay, this will all make sense in time. And I told you at that time that we would retrace back 38.2, 61.8, okay, and or we could go higher, right? But that's not an ABC pattern. So again, double top followed by a decline, crossing the 50 period, 200 period, then retracing back to 38.2 or 61.8. You can see there again, we hit it almost exactly, and off to the races we go. So the only thing on this chart that we're missing is a little 13 period moving average, right? So right in through here, I would have a 13 period moving average, and on the close below that would become my short entry. Okay, hopefully that makes sense. And then of course, I think I have literally like 1 minute here. So, maybe do this, take some time and just go back and review these, but I'll show you very quickly. And then tomorrow I will answer every question you all have. At the bottom of the pandemic, notice that we have a almost exactly 127. That was an inverse head and shoulders pattern. So again, these are amazing. Just kind of take your time. I'm sorry, I didn't want to do sales pitches. I didn't want to do anything. I just wanted to come in and give you the information, let you go back and review it as much as you want to. And then if you have any questions tomorrow in the room, we'll answer all of those. And then of course, anytime you have any questions, I'm sure this is going to be posted on YouTube or whatever the case may be. But if you have any questions, just shoot them out to us, right? Go back and review each of the slides that we've provided. And what you'll see is these patterns emerge at almost every reversal, major reversal, should I say. Okay, it's pretty cool. And in correlation to this, tomorrow in the live room, what I will do is I will show you how we take this and we say, okay, this too, like any strategy, is half, right? Well, wait a minute. Well, I mean, you've just shown me like this really cool strategy. Isn't that enough? No, it's not. It's not. We need to take the strategy, implement it at the right location. And that's what we're going to talk about tomorrow in the live room. We're going to do a lot of supply and demand levels, taking these patterns, recognizing them at the right location, so on and so forth. Okay. So again, just review the recording. I sincerely apologize. I always get ahead of myself because I'm so passionate about getting the information out. But there you have it. Kind of review that. I'm going to turn it back over. Please take every question that you've had, just copy it real quick. And then tomorrow in our live room, just go ahead and register for that. Again, free, not, it's not going to cost you anything. And then I will take, upon hours to answer every question that you have. I sincerely thank you all for your time. I've always enjoyed every moment I've had in the NinjaTrader ecosystem. It's always been amazing. That comes from the bottom of my heart. Thank you all very much on both sides of NinjaTrader and you personally for being here. And again, if you have any questions, just let us know. We're happy to help. Okay. Thanks so much, guys, gals. Bye for now.
Thank you again, Will, for taking time to share with us today. If you enjoyed today's session, we hope that you will see us in future webinars. We would like to remind you the information provided was of Pure Financial Academy and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from everybody here in the NinjaTrader ecosystem. Thank you, everybody. Thanks, Will, again. Have a wonderful day.